Understanding bank draft, a simple guide for English learners. Hello, dear learners. Today we're going to unravel the mystery behind a very important term used in the financial world: bank draft. Whether you're dealing with business transactions, planning to study abroad, or simply curious about financial instruments, knowing what a bank draft is can be incredibly useful. So, let's dive in and make sense of it together. A bank draft is a payment method where the payment is guaranteed by the issuing bank. It's a bit like a check, but while a check is drawn against the funds in your personal account, a bank draft is drawn against the bank's funds, making it a more secure form of payment. It's important to understand that when you request a bank draft, the bank will freeze the amount in your account, ensuring that there are enough funds to cover the draft when the recipient cashes it. The process of obtaining a bank draft involves a few steps. First, you would go to your bank and request a draft for a certain amount. The bank then checks if you have sufficient funds in your account. If you do, the bank deducts that amount from your account and then issues the draft. The draft states that the bank promises to pay the stated amount to the person or entity named on the draft. Once you hand over the draft to the recipient, they can deposit it into their bank account, where the funds will be cleared after verification by the recipient's bank. Bank drafts are often used in situations where the payment needs to be very secure and where large sums of money are involved. For example, buying a car or a house, paying for university tuition, transacting with someone in another country. Because the bank guarantees the payment, it is safer for the seller, who can be confident that the bank draft will not bounce, unlike a personal check. Benefits. Security. Bank drafts are considered secure because they are backed by the bank's own funds. Certainty of payment. Sellers have the assurance that they will receive the money. Widely accepted. Accepted in international trade due to the credibility of banks. Drawbacks. Fees. Banks may charge a fee for issuing a draft. Inconvenience. It requires a trip to the bank and cannot be done instantly like an electronic transfer. Irrevocable. Once a bank draft is issued, you can't stop the payment as you might with a check. We hope this explanation has shed light on what a bank draft is and how it functions in the financial realm. It's a useful tool for making secure transactions, especially when large sums are involved. If you ever find yourself needing to make or receive a guaranteed payment, a bank draft could be a reliable option. Thank you for watching, and we hope this video has been informative. Happy learning, and see you in our next video.